Hello, before we start today's video, just a quick note that if you are interested in purchasing this indicator, just simply email us at daytradinggps@gmail.com to request a discount promo code. In return for you taking your time for watching this video today, you can email us and request a discount promo code that will give you a substantial discount on the purchase of the indicator. All of our indicators are sold on a one payment for lifetime access basis. Thank you. Today's video is going to be a very short and condensed video, which we will just go over the trades of the session, and we're not going to go over how the indicator works and the general overview of the indicator that we normally do. So look in the description of this video underneath the video, and you will see this section here that will give you links to a video overview of the indicator. Also, this link here, which is a Google Drive link, which will take you to this document, which are links and descriptions to other videos on different topics about this indicator. And also, we have links to longer SPX trading videos that go into more detail about this indicator and the daily key levels trading strategy. Thank you. Hello, in today's video we'll be taking a look at the Monday, February 2nd, 2026 trading session for the CBOE SPX index utilizing the Day Trading GPS SPX Daily Key Levels V2.0 indicator for making our trades. Okay, so as mentioned in the preview, this is going to be a very short and condensed session video. We're not going to go over all the aspects of how the indicator works and how the strategy works. As mentioned in the preview, go to the description of this video underneath the YouTube video, and you will see links to an overview video of this indicator and also links to longer SPX session videos, which go into a lot more detail about how this indicator works, what all the levels mean, and different aspects and more details about the daily key levels trading strategy for SPX 0DTE options. Also, there's a Google Drive link which will give you links to specific topics on this indicator, and you can also click on that Google Drive link and look over those various topics and also look at those videos if you would like more information on specific details regarding the indicator. Okay, so in today's session we have the 9:30 a.m. opening candle here. As we've noted, this is a bullish entry on this 9:30 a.m. candle because it is closing above the bull bear KPL, and it is also within the acceptable range for a BBKPL based bullish trade. One of those videos that we did talk about on the Google Drive link is what is within the acceptable range and outside the acceptable range for bullish and bearish trades off of any of the main key levels. Our stop losses on this BBKPL bullish trade are going to be two different stop losses to choose from. If you prefer a tight stop loss, then that is the QL level below the bull bear KPL. If you prefer to use a standard stop loss, then that is going to be the first midpoint level below the level you're taking the trade from, in this case the bull bear KPL. So the first midpoint below is this level here. As far as option strikes, there are three different option strikes utilizing this indicator. How you figure that out on this particular trade is you look at the level that you're taking the trade from. What type of trade is it? A bullish trade. So we're looking for call option strikes. The standard play is going to be the closest SPX 0DTE strike to today's bull bear KPL, as that's the level we're taking the trade from, and that's going to be today's level of 69.1728. So the closest strike to that is the 69.15 call strike for this bullish trade. The two other option strikes are going to be out of the money strikes. How you figure that out is you take the level you're taking the trade from, the direction bullish, we look up to the first midpoint level, which is this mid BBKPLR1 of 69.2536, and that is going to be the 69.25 call option if you prefer an out of the money option for this trade. The furthest out of the money option you can consider for this trade is we look up one full level, since we're having a bullish trade from this level, and it's R1 69.3344. So the furthest out of the money you can consider for call option strike on this trade is going to be the closest strike to 69.3344, and that is going to be the 69.35 call strike. Here we have the data boxes for the ask prices on the close of this candle. We're on a 2-minute chart. The 2-minute chart is the time frame that you will see in all of our SPX videos on this channel outlining the strategy. That is the recommended chart time frame for utilizing this indicator with this particular daily key level strategy. And here we have the close of the candle above. So we're making our entry on the close of the candle. So the three different options here that we have the standard play at the money, 69.15, that is 24.60 ask on the candle close. The 69.25, first out of the money option to consider is 18.50 on the candle close, and the furthest out of the money is going to be the 69.35, which is going to be 13.40 on the ask on the 9:30 a.m. candle close. With this indicator, you have two different types of trades you can do. Either you're doing scalp only trades, which are going to be quick in and out trades. With scalp only trades, you're looking for a one level move in your favor. The one level move is based on the level that you're taking the trade from. You look in the direction that you're taking the trade, in this case bullish, and one full level up is R1, so that is your exit for a scalp only. At 9:34 a.m., the R1 level is hit, so that is your exit for the scalp only. The bid prices on the candle close are here in these data boxes here. The 69.15 call is 33.30 bid on the candle close, profit $860 per contract. The 69.25 is 26.10, that's a profit of $760 per call. The 69.35 is 19.70, that's a profit of $630 per call. Next, we have at 9:36 a.m. on the very next candle, a hit of the mid R1, R2 level here. This is the 1.5 level minimum required move for a regular trade. So that is the second type of trade you can do with this indicator. A regular trade differs from a scalp trade in that a regular trade, you have three options for what to do once it hits the minimum threshold of the 1.5 level move in your favor. Either you can exit all of your contracts on that 1.5 level hit, or you can adjust your stop loss to now a price-based stop loss, which would be either modifying your stop loss to the price that you paid for the options. So in this case, you would modify your stop loss to 24.60 as being break even for the at the money 69.15, or you would modify it to $18.50 if you chose this option instead, this out of the money. Or the furthest out of the money, 69.35, you would adjust your stop loss to break even at 13.40. You can also alternatively add a profit buffer of 10 to 15% initially here at this minimum threshold if you prefer to add a profit buffer on top of the break even amount. And by doing that, you just add 10% at least to this price, or 10% to that price, or 10% to this price, or the max would be 15% if you choose to do an additional amount for a profit buffer greater than 10%. The third option is only applies if you're trading multiple contracts, of 3 contracts or more. In that scenario, you would be closing out 70 to 90% of your contracts. Of course, whether you can do between 70 and 90% depends on how many contracts you're trading. If you're trading 10 as an example, then 7 would be 70%, 8 would be 80%, and 9 would be 90%. And then you're leaving a runner or multiple runners, depending on how many contracts you started out with and how many you have left after closing 70 to 90%. And then on those runners, remaining contracts, you would adjust your stop loss now to a price-based stop loss of break even or better on those remaining runners And then as price continues to move in your favor up through the different other key levels, then you can choose to either exit the runners or exit some of the runners and leave other runners for making decisions at further moves in your favor, or you can just go ahead and exit all the runners at an additional move to another level in your favor. Okay, so on this 9:36 a.m. hit, here we have the candle data boxes for that. 69.15 call, 36.40, now profit of $1,170 per contract. 69.25 call, 28.90 on the bid, profit $1,040 per contract. 69.35 call, $22, profit $860 per contract. Now at 9:48 a.m. we have the hit of the R2 level. That is now a two-level move in our favor. That is considered the minimum ideal move because in most sessions a two-level move from the level that you're starting your bullish or bearish trade from is generally going to be the extent of most moves on low to moderate volatility days, whereas on higher volatility days to extreme volatility days, then a moves that would be more common would be in the 2.5 to 6 level range. On this particular hit here, we have the 9:48 data boxes here with the bid prices on the candle close. 69.15 call, now 41.50, profit $1,680 per contract. 69.25, 33.20, profit $1,470 per contract. 69.35, 25.50, profit $1,210 per contract. Now, next at 10:04 a.m., we have a hit of the YDH level. This is an extended move. YDH is the previous RTH sessions high. So that is your YDH level. The YDC level is your previous RTH sessions close. Your YDL level is the previous RTH session low. Your PML level is today's pre-market low. The PMH level is today's pre-market high. So the YDH level is an important level on bullish moves. If it hits, that's also a waypoint for decision making as it is occurring after the 1.5 level minimum threshold move for a regular trade. So at this point on this hit of the YDH, that is also a decision making level. At the 69.15 call, it's now 51.10 on this 10:04 a.m. candle bid. Profit $2,640 per contract on the 69.15s. The 69.25 is 42.10. Profit $2,360 per call contract. 69.35 is now 33.60 on the bid on the candle close. Profit $2,020 per contract. Now keep in mind that all of these figures here don't include any possible slippage, and also they do not include any clearing fees or any possible commissions that you may be paying to your broker on getting in and out of these moves. Okay, so on 10:06 a.m. we have a hit of the mid R2, R3 level here. That is now a 2.5 level extended move starting from the bull bear key price level. You have your 1 level scalp, 1.5 level minimum threshold for regular trade, 2 level move, ideal move, YDH extended move, and now we have the 2.5 level move. Here are the data boxes for the 10:06 a.m. The bid prices 54.30 on the 69.15 at the money, now $2,960 profit per call contract. 69.25, 45.60 profit $2,710 per contract. And finally, the furthest out of the money, 69.35 that started at 13.40 is now 36.70 profit $2,330 per contract. If price continues to move up to the R3 level and above, those would be additional waypoints for decision making on any remaining runners, or if you still had all your contracts from adjusting your stop losses, each of the succeeding levels would be whether they're a main key level like the R levels in this case for a bullish trade above, or the midpoint levels. Those are additional waypoints for additional decision making for either further adjustment of stop loss, exit of contracts, or for decision making for any remaining runners. If you would like to purchase this indicator, as mentioned in the preview, you can, in return for watching this video today and taking your valuable time to do so, you can request a discount promo code by sending us an email at daytradinggps@gmail.com and request a promo code for the SPX Daily Key Levels indicator, and we will send you a promo code for a substantial discount on the purchase of this indicator. All of our indicators are currently sold on a one payment for lifetime access basis. That means you make one payment and you have access to the indicator for life. Lifetime access also includes any future updates to this indicator, as well as any future versions of the indicator that we release that have any additional new features. So that's going to wrap it up for today's video. Thank you for taking your time for watching this video. If you'd like the video, please hit the like button, as that helps us with the YouTube algorithm. If you'd like to be notified of any additional videos that we post on this channel, please go ahead and hit the subscribe button, and then you'll be notified of any additional videos that we post on either SPX session videos or videos on other trading topics. Thank you again for taking the time for watching this video today and supporting our channel.